Welcome to OnlyPounds. At some point in your life, you will probably have to work, and the reward for this work is a paycheck at the end of the week or month. However, you don't get to keep all of it. You have to pay a thing called tax. As an employee of a company, there are two types of income tax that you'll have to pay. That's normal tax and then national insurance. This video will detail how much you pay and how it's calculated. And stick around to see if you're eligible to save £250 in tax every year. We'll start this video with the reasons we pay these taxes. Some reasons we pay national insurance is for paying out things like state pensions, sickness and disability benefits, child benefits and job seekers allowance. A small amount of national insurance contributions is given towards the NHS. By paying national insurance, it also entitles you to claim these things when necessary. It's worth noting you need to show 35 years of national insurance contributions to get the full state pension, and at least 10 years to get any state pension. On the other hand, taxes are used for funding things like the NHS, schooling, roads, and investment projects such as housing and many other things. Understanding how income tax works really isn't that difficult, and even though it affects everybody watching, it's something that is never really taught to us in school. The tax year resets on April the 6th every year, so everything you earn starting from April the 6th to the following April 5th counts towards what can be taxed. For example, if you start working in January and get paid £500 a week for 13 weeks, that's until April 5th, you'd have only earned £6,500 that tax year, which would be national insurance and tax-free. It's tax-free due to the following limits. In terms of national insurance, you pay nothing on anything you earn up to £9,500 that tax year. You pay 12% national insurance contributions on anything you earn between £9,501 and £50,000. Anything above £50,000 you'll pay 2% national insurance on. In terms of tax, you pay no tax on anything you earn up to £12,500. You pay 20% on anything you earn between £12,500 and £50,000. That's what's called the basic rate of tax. You pay 40% on anything you earn between £50,000 and £150,000. That's called a higher rate of tax. And anything you earn above £150,000, you'll pay 45% tax rate on. That's called additional rate tax. Let's look at an example. Imagine you are paid £30,000 in the 2020-2021 tax year. So from 6th of April 2020 to the 5th of April 2021. What you pay is broken down as follows. National insurance. £9,500 would be national insurance free, so you'd have £20,500 subject to the 12% rate of national insurance. This works out to be £2,460 paid in national insurance over the course of the year. In terms of standard tax, £12,500 of what you earned is tax-free, so you'd have £17,500 subject to tax. As your salary is below £50,000, you'll be taxed at a flat rate of 20%. So by doing a quick calculation, you can see that you'd pay £3,500 in tax that year. Together, that works out to be £5,960 of your salary that you're giving to the government, leaving you with a little over £24,000 left. That's provided you don't have any student loans or contribute towards your pension. We've made videos on both of those topics, so remember to look at those after finishing this one. Let's quickly take a look at another example. Imagine you have now earned £60,000 that same year. You'll still have your national insurance free £9,500, and you'll pay 12% of your income between £9,500 and £50,000. That's 12% of £40,500, and 2% of what you earned between £50,000 and £60,000. That's 2% of £10,000. This gives you a total of £5,060 paid in national insurance over the year. In terms of tax, you'd still have your tax-free £12,500, then you'll pay 20% on £37,500 and 40% on £10,000. Totaling £7,500 and £4,000 paid in each bracket. You'd pay £11,500 in tax that year. Together, from your £60,000 salary, you'd pay around £16,560 in tax and national insurance. This leaves you with £43,440. Again, before paying out any student loans or contributing towards your pension, which are both taken out of your gross salary and not your take-home. If you want to look at your own examples, Money Saving Expert's Tax Calculator is a really good tool as it lets you see how much you take home weekly and monthly. Check it out in the link below. Taxes and national insurance come out of your pay, whether it's weekly or monthly, and they calculate tax by predicting your income for the year, but you'll be refunded tax the following year if you pay extra. Reclaiming national insurance, however, can be a tricky process, as it's calculated monthly, and you have to contact your employer to claim it back. If you're returning to studies, you wouldn't be able to reclaim any national insurance you overpaid, but you can reclaim tax. So by now you may be wondering, how would you know if you do overpay in tax? You can check your income for that tax year on the P60 form, which is given to you by your employer at the end of the tax year. You can also look at a P45, which is given to you by your employer after you leave the workplace. Alternatively, you can track how much tax and national insurance you've paid to date by looking at your payslip, as it's normally written somewhere on there. Now, before we leave you, we'll give you a brief explanation on common tax codes and how some of you can save £250 in tax every year. Any codes you don't see here you can check on the gov.uk site. The standard tax code is 1250L, meaning you have £12,500 tax-free allowance, and L just means standard personal allowance. The letter M is the marriage allowance. This means you receive an extra 10% tax-free, so you'd have a tax-free allowance of £13,750 as opposed to £12,500. This is the equivalent of not having to pay £250 in tax, and it's useful if your partner doesn't hit the tax bracket. This leaves your partner with the letter N and an £11,250 tax-free allowance. This is great for married couples where only one person works, as they'll save an extra £250 a year in tax. For those with 2 jobs, the code for your second job will likely be BR, D0 or D1, which just means basic rate, higher rate or additional rate, meaning you'll be taxed on your entire second paycheck without any allowance. Again, if you ever overpay, you can claim it back at the end of the tax year or whenever you stop work. So there we have it. You should now understand how your income is taxed and have an idea of how much of your salary you'll take home. Feel free to tweet us at OnlyPounds and request any other topics you'd like to see. Thank you for watching. Please like, subscribe and leave a comment sharing any experiences you've had dealing with tax refunds. And remember, here at OnlyPounds, our mission is to expose our young people to financial education. We are not your financial advisors, and it is up to you to continue researching the best options for you. We do our best to provide information you can look into and build upon, using your best judgment. Catch you guys soon.